ISM manufacturing PMI in the US falls to 48.7. Dollar Swiss on my radar, currently breaking this 0.9 handle. Let's go and discuss some key talking points for potential dollar Swiss shorts. So looking at some data with regards to dollar Swiss going into this trading week, one of the reasons why it was on my radar was because we've got the CPI year on year in Switzerland, which is forecast to grow to 1.6% from 1.4%. That could increase that Swiss strength that we're seeing in the markets at this current moment in time. In the US, we've got lots of important data. I just told you about the ISM manufacturing PMIs coming in lower, but we do have non-farm payrolls coming up this week as well. That is also expected to come in below that 200k mark for the second consecutive month, which would be going in the direction of what the Federal Reserve needed to see in terms of the labour market. So let's go and have a little look at some other reasons why I like dollar Swiss downside. Well, seasonality actually shows us that dollar Swiss, its worst performing month is June. 15 out of the previous 20 times the price of dollar Swiss has closed lower in the month of June. I've also have a dollar Swiss chart here with the overlay of the US 10-year bonds, which are starting to decline again. We came up into the 7.5% area just here, which were these kind of previous highs in the US 10-year, and we're starting to see a decline here now. Kind of broke this channel as well, and we're starting to see a little bit more downside here for those bonds. So that's going to help decrease that US dollar strength in the market, or lack of strength that we've been seeing in the US dollar. Going on to the sentiment indicators then. So the reason why I like using sentiment indicators, it shows us where retail are positioned now. Naturally, retail get it wrong more than they get it right. So it can be used as a bit of a contrarian tool. So if the retail traders are, majority of them, are they bearish or bullish on dollar Swiss? Well, it's telling us that 74% of clients are net long with this particular sentiment indicator. That tells us that we could be looking at a bearish point of view when it comes to dollar Swiss, adding a bit of confluence to that. Finally, then going on to dollar Swiss, like we showed you at the start, we're breaking through that area of support. So where's the next stop for US dollar Swiss? Now, for me, I like the idea of price coming back down towards this volume area between that sort of 0.8870 and below. We can see this kind of build up of consolidation here that formed between the sort of the 11th of February to around about the 11th of March, and that would be an area where volume has been built up in the markets. So I'm looking for the market to break out of this area, head down towards that point. Now, we are at technical support at the moment, so it's really important how this daily chart closes. What we're seeing at the moment, obviously, is a break. However, that could soon change, and what I don't want to see is a close like a pin candle on the day, because that will tell me that the market is potentially holding the range. What we want to see is a close below this area, maybe even with a secondary close, and then on a lower high we'll look for the opportunity down into this key volume area. Further confluence, we're trading below the daily 50 moving average now. When price is above it, I like to look for those kind of long ideas. When price is below it, I like to try and look for those short ideas. So keep an eye on dollar Swiss. I like the idea of price continuing to the downside.